Hello and welcome to the January fund update for the Pure Income and Growth Fund and the Pure Resources Fund. I'm Nick Berry, Portfolio Manager and co-founder of the funds. Markets-wise, the year got off to a strong start, driven by large caps with more muted positive performance from small caps. In the context of this, the Income and Growth Fund declined 2.1% for the month of January due to a provision we have taken in relation to one position, discussed further in the following. The Pure Resources Fund returned to a modest positive performance of 0.3% for January. Turning to the underlying factors driving individual fund performance for the month, the 2.1% decline in the net asset value of the Income and Growth Fund was due to a provision the investment committee elected to take against the carrying value of an asset sale process in relation to a single position in the fund. The nature of the negotiation surrounding the asset sale process is sensitive and is now subject to arbitration, a process that we initiated. Whilst we believe we have a strong legal position on full value recovery, we have elected to impair the contracted proceeds from the sale by 50% for conservatism. We note the remaining carrying value of the position is equivalent to 2% of fund NAV, and investors can access more information in the newsletter. Elsewhere in the Income and Growth Fund portfolio, the outlook is encouraging. We note 5 positions are currently in value accretive M&A discussions, and this follows on from the acquisitions of portfolio positions Decmil, Sitesoft and Tyrula last year. Further, we remain well leveraged into Spacetalk, which, after delivering a muted equity performance in 2024 and January this year, is currently up approximately 50% in February as buying has begun to return to the microcap end of the market. And at its now 13 million capitalisation, Spacetalk is trading at approximately 1 times annual recurring revenue and 0.5 times total revenue, whilst also having improved its profit position in first half 25 to EBITDA break even from a loss in the prior period of $2.7 million. We also remain bullish on the prospects for modular data center manufacturer DXN. The company reported 71% first half revenue growth and reiterated guidance for 50% full year revenue growth. The share price has drifted in January, however, we believe this reflects a lack of understanding from investors about the timing of cash receipts versus revenue recognition. The company is well capitalised and remains well positioned for additional contract wins, in our view. Turning to the Pure Resources Fund, we remain bullish on our underlying commodity exposure positioning, being predominantly gold, East Coast gas and tungsten. With the gold price continuing to set new all-time highs in the new year, this is very positive for the free cash flow of portfolio position Kingston Resources, and we will be surprised if we don't see a strong rally in that stock before the end of the financial year. Further, tariffs and the broader geopolitical tensions between the US and China continue to support the tungsten price, with our investment in G6 Metals, the largest tungsten mine globally outside of China and the highest quality tungsten mine globally outside of China, a key beneficiary. This is important as China is approximately 80% of global tungsten supply. Finally, key portfolio position Comet Ridge, our investment in the East Coast gas shortage thematic, announced the commencement of the production phase of 2 new wells in January. With dewatering now well underway, we expect news flow in the second quarter of calendar 25 regarding gas production. Thanks for watching, and we'll see you in a few weeks with the February update.